Continuing from our previous article, if companies like Virgin Galactic are brave explorers, piloting small sailboats into uncharted waters, then our next discussion is about the admirals who command vast fleets and provide security for governments worldwide. These are the traditional aerospace and defense giants: Boeing, BA, Lockheed Martin, LMT, and Northrop Grumman, NOC. For these giants, space travel is just a small part of their vast business portfolio. Their core business is providing mission-critical services to governments, particularly NASA and the Department of Defense. Investing in them isn't about buying the dream of a space ticket, but the certainty of national strategy and substantial government contracts. Boeing, a century-old company, has faced numerous challenges in the commercial aircraft sector in recent years, but it remains a force to be reckoned with in space. Its core space program is the CST-100 Starliner, the commercial crew spaceflight program signed with NASA. The Starliner was designed to provide NASA with a second option besides SpaceX's Dragon spacecraft, ensuring the United States can independently send astronauts to the International Space Station. This is its core value, a redundancy backup for national strategy. However, the Starliner project has been plagued by delays and technical issues. While the first crewed test flight in June 2024 successfully docked with the space station, multiple helium leaks and thruster failures occurred during the mission, repeatedly extending the astronauts' stay at the station. Ultimately, the spacecraft had to return to Earth empty, with the astronauts returning home aboard a SpaceX spacecraft in March 2025. The next Starliner flight has been postponed to early 2026, and NASA is still evaluating whether to conduct another uncrewed test flight. These issues have not only eroded Boeing's profits but also severely damaged its reputation in the aerospace sector. Boeing's stock price is primarily influenced by its commercial aircraft business, particularly the production and delivery of the 737 MAX and 787, with its space business making up a relatively small portion. Due to repeated setbacks in the Starliner project in recent years, losses exceeding $2 billion, and market pressure, Boeing is considering divesting part or all of its space business. The CEO has explicitly stated the goal of focusing on core businesses and reducing uncompetitive marginal operations. Therefore, its valuation needs to be viewed from the perspective of the entire company. Analysts' views on Boeing vary widely, with price targets ranging from $111 to $240, reflecting the market's significant uncertainty about its ability to resolve production and quality issues. Boeing faces severe quality control and supply chain challenges for both aircraft and spacecraft. Its safety margins are provided by its substantial defense contracts and backlog of commercial aircraft orders, which provide a significant cushion. Investing in Boeing is a bet that this industrial giant can learn from its mistakes and get back on track, devoting its resources to its products rather than anything else. While Boeing's Starliner remains in low Earth orbit, Lockheed Martin and Northrop Grumman have much more ambitious goals, returning to the Moon and even landing on Mars. They are core contractors for NASA's Artemis program. Lockheed Martin, LMT, it is the prime contractor for the Orion spacecraft, the most advanced deep space manned spacecraft ever built, which will carry astronauts to lunar orbit. In May 2025, Lockheed officially delivered the Orion spacecraft for the Artemis II mission to NASA, paving the way for the first crewed circumlunar flight in early 2026. Although its space-related business currently accounts for less than 20% of its overall revenue, it is projected to be the company's fastest-growing segment in 2023 to 2024, primarily driven by defense and security space missions, such as missile warning and strategic deterrence, and national security space programs. The space segment maintains an aggressive expansion momentum, relying heavily on national security contracts while simultaneously penetrating commercial and global markets. Its share is expected to steadily increase over the medium to long term, with space revenue expected to grow faster than the company's average in the coming years. Northrop Grumman, NOC, it manufactures the solid rocket boosters that propel the Space Launch System, SLS, heavy lift rocket. It is also building critical living and logistics modules for the Future Gateway, a lunar orbital space station. Despite a brief decline in 2024, company management has stated that space is the future growth engine, with growth expected to resume after the end of 2025. the company prioritizes and continues to expand its space business. The space business is expected to expand rapidly in 2025 to 2026, with revenue from the segment expected to exceed 1/3 of the company's total revenue, driven by commercial and multinational government contracts. The core competitiveness of these two companies lies in their long-standing and deep-rooted partnership with the U.S. government and their extensive expertise in cutting-edge defense and aerospace technology. Their revenue and profits are extremely stable, and they boast contract backlogs amounting to hundreds of billions of dollars. Their valuations are based on proven profitability and cash flow, typically measured by price-to-earnings, P/E ratios. They are quintessential value and defensive stocks, with modest but remarkably stable growth, and they reward shareholders through dividends and share repurchases. These two companies have the lowest risk of all space-related stocks, primarily arising from government budget cuts or shifting priorities. However, their margins of safety are the highest. Their large, diversified defense contract portfolio means that even if a single space project encounters problems, the overall financial impact on the company is relatively limited. Judging by current and perhaps even long-term global geopolitical developments, there's no sign of a reduction in government defense spending. For investors seeking a steady, long-term investment in the space economy, LMT and NOC are undisputed ballast. Okay, that's all for now. We'll continue next time.